Hi guys, thanks for tuning in to another episode of Nuggets News. Well, today I want to give you a bit of an update on the Bitcoin cycle, that large 4-year halving cycle that we talk about. We're going to go over our projections from a year and even 2 years ago compared to where we stand now. We're going to talk about all the big driving factors in 2020. Are they over? Have we topped? Where I think we're going. Tie together the fundamentals, the on-chain data, as well as that psychology and sentiment. So the three pillars of everything we do to talk about where I think Bitcoin is going this year and beyond. So look, at the moment, we've had a tremendous run up towards 42,000 and quite a sharp pullback, a little bit of a bounce this morning at time of recording. But we have to remember that it was only in March when all markets crashed that we got down under 4,000. And so to have 1,000% run up in 9 months is absolutely tremendous for an asset class that touched $1 trillion. So we're no longer in these baby figures. We're starting to really get up there. And that's probably one of the biggest things that changed this year, was that global recognition in terms of Bitcoin's brand awareness and size. So no matter how many times people have seen this Wall Street cheat sheet, when things go parabolic, then we have the crash, that accumulation or depression period when people think the asset is dead. For those of us that have been in this market through at least 3 of these major cycles and probably 6 or 8 smaller ones in between, it is this rhythm of the market. History doesn't repeat, but it does rhyme. And so many people, this is the first time that they have been through this whole cycle and thought to themselves, you know what, Bitcoin isn't dead. I heard about it and now it's coming back. Now it's making all-time highs. And this time I think it's just happened so quickly that it's caught people off guard. By the time it had passed through 20,000 and the news had picked up on it, particularly because it was over that Christmas New Year period, before you know it, before retail have had a chance to sign up to an exchange and get home from holiday, it's at 42,000. So look, I don't think retail have entered the space yet. We'll get into that in just a second, but I really think that for a lot of people, if you've been through the cycle now, you've seen this, and it really changes the way you think about Bitcoin. So let's go back to 2 years ago. This was our 4-year Bitcoin and Litecoin halving cycle. Remember, Litecoin had its halving the year before Bitcoin, and we were projecting a run up from Litecoin from around $30 to $150, and that played out. Now, Bitcoin in this video was $3,400. Remember, it bottomed at $3,200, so this was about as close as it could get. And we were projecting that it could get to $100,000 sometime in 2022. Now, that's all playing out nicely. We're going to have a look at this chart later on, but it's funny that you can make such accurate projections because of the cyclicality of Bitcoin, but it's more because of the human emotion. That's really what this asset trades on. And even rewinding years before that, we had these logarithmic regression charts that would show up on the Bitcoin forums back in 2012, 13, 14, and they're still fairly accurate. So they've probably fallen, a year or two behind. But the fact that it's even within, one order of magnitude within accuracy, being able to predict that Bitcoin will go from $10 up towards $100,000, 8-9 years ago, it really is amazing. That pace of growth. Now, since then, we've had a lot of other new models come in. We've got people comparing things like Bitcoin difficulty and telling us that, hash rate of those Bitcoin miners leads price. And other people say, no, price leads hash rate. And now people are talking about Bitcoin's almost a unit of energy. It's almost the price of that energy, and who can get energy the cheapest or create the best renewable form of energy, because once you've got renewable, you can mine more Bitcoin, and that's all, almost a unit of power. And the electrodollar, a guest that Raul Paul and the guys at Real Vision had on referred to it as, and I really love that term. I just think that so many people are now thinking about Bitcoin from different angles rather than just this flash in the pan. It's very, very serious asset now on the global stage. Now, Plan B's got his stock to flow model. He updated that a little bit as well with stock to flow X with a few changes. That fell a little bit behind at one stage in crypto winter there. And all of a sudden, we're right back on pace with where we should be. And he's still projecting these prices of 200, 300,000 within a year or two now. Whether or not that becomes a self-fulfilling prophecy, who knows? But they're staggering numbers. And this year has proven that, I guess, anything is possible. Bitcoin compared to an ounce of gold, a lot of people like to make this comparison. And I think, look, there's certain aspects of it that are true, but I also don't think that Bitcoin replaces gold altogether. Yes, we're moving into more of a digital age, but gold is going to have its place. And I'll do my gold and silver projections and macro update as well sometime soon. But I don't like the competition. I think in a world with hundreds of trillions of dollars of debt, we really need to be on the same team, okay? Gold and Bitcoin still relatively small compared to all that fiat currency out there, derivatives, it's funny to me that we're infighting, and silver bugs don't like gold bugs, and gold bugs don't like Bitcoiners, and Bitcoiners are putting out these drop gold campaigns, and every time they do, it's almost like Bitcoin has a bad run and gold has another good run. So we're all on the same team. We want sound money. We don't want government control and censorship of our money. So I hope that is something that does change going forward. The biggest thing that happened over the past 12 months, I think, are these institutional names, household names, trusted names. They've got track records. Paul Tudor Joneses of the world coming out and saying, I've got some Bitcoin in my fund. My clients have got it. This is the real deal. Is it too late to buy Bitcoin? Not at all. We're only in the first innings. And people thought, didn't take him seriously back in October. And, who's laughing now? But it wasn't just him. There was a lot of these older hedge fund managers. Even Stan Druckenmiller has come around. Anthony Scaramucci, one by one, we just had more and more of these household names come out and say, yep, it's the real deal. We've got $400,000 targets from Guggenheim's Scott Minard here as well. So at one stage there, it felt like who can put out the biggest projection. JP Morgan jumping on board. I think most of you will remember in crypto winter when everyone was bashing it, Jamie Dimon saying anyone that gets caught trading Bitcoin, whatever, is going to get fired. And I said, this is how they're going to treat this asset. They don't want anyone to take it seriously. They want to bash it into the ground. I actually think this is almost what happened with silver as well. A lot of the commercial banks short silver. So they flood the market with these contracts, betting the price is going to go down. That pushes the price down. I think they've also done that with Bitcoin to some degree. You'll remember that Bitcoin cash settled futures launched on the day Bitcoin topped at 20,000. I remember it clearly because it's my birthday, and that December 18th date has had significance every year. It's either been a top or a bottom, or at least an interim top or bottom. So now that they've all got their ability here to service Bitcoin for clients, custody, insurance, take a clip of fees whenever they buy or sell, they don't care which direction it goes, but they're going to get more people interested in it if it goes up and if their clients are making money. So that's why you're going to see them pump Bitcoin's tires. And when it runs up too fast, I think it was this gentleman a week or two later comes around and says we might have topped now. And so that's what they want. They want volatility. They want clients buying and selling. But ultimately, I think they are going to push it higher. They've got a vested interest. They haven't outlaid all this money to set up all this stuff for it to have a bubble that's just popped, a few months in. And they're not going to make any money and not get any new clients while it just slowly bleeds out over the next 3 years in crypto winter. That is not going to happen at all. It's a self-fulfilling prophecy now that they're all going to pump Bitcoin and crypto's tires because they're going to make a clip of fees. So they want this thing to go into the multi-trillions because they're making a percentage of that. All right, Michael Saylor, he was another influential character this year. Most people, myself included, hadn't really heard of him before this year. The CEO of a tech company, MicroStrategy. Next thing you know, he buys $100 or so million of Bitcoin, says, you know what, we might buy some more, and we might buy some more. Hey, there's that much free money out there these days because of the Fed printing and interest rates that we're actually going to borrow money or we're going to raise capital just to buy Bitcoin. So in some ways, they almost became like a Bitcoin ETF. A lot of people started speculating on their share price because it was a way to have exposure to Bitcoin that was very, very easy. And a lot of people are still waiting for an ETF because they've always done things through their brokerage account. They don't want to take a photo of themselves and write down on a bit of paper that this is them and to register for a crypto exchange. I know there's probably other ways that are easier than that and mobile apps, which we'll get to in a second. But for some people that are stuck in their ways, and for money managers in particular, it's that Bitcoin ETF, which no matter what, it's going to bring in a new wave of money for those people that are used to doing things that way. But either way, Michael Saylor, I think he is going to shake things up, and I wouldn't be surprised if he brings about a rule change, because if he does this, it sets a precedent for everyone else to do it. Wouldn't you and I love a money printer or be able to borrow $1 million to go buy Bitcoin? If everyone could do that, this thing's going a lot higher. And now that corporations are cluing in and more, we have now a dozen companies or more that have got crypto on their balance sheet. No one wanted to be first. I've had this saying for years and it's finally caught on. No one wants to be first, but then no one wants to be last. And boy, oh boy, did we see that play out this year with now, probably a couple of dozen companies with crypto on their balance sheet. And if people become worried about their local currency, no matter what country you're in, how are governments and regulators going to react when every company around the world starts issuing debt and to buy Bitcoin? Or maybe they buy gold, whatever it is, but it's this race to buy anything real because money is just losing value so fast. And that is a real game changer. Now, in Iran, they're using Bitcoin. They're actually forcing all their miners locally to either take their equipment or to buy the Bitcoins off them to do trade and to evade sanctions. So again, each country, each individual is using Bitcoin for a different reason. I think so many people forget that it has multiple utilities. Now, this is going to become controversial, but the fact is that Bitcoin, is neutral. Bitcoin is just a technology. It's just an enabler. It's these second order effects that need to be fixed. It's not Bitcoin's fault that someone is using it because it's a way to transfer value from A to B. Square, they've done an amazing job at getting out that Cash App into people's hands. Their revenue has absolutely soared this year. Could it go to $1 billion if Bitcoin goes to 100,000? Maybe imagine making $1 billion just from fees off selling Bitcoin, and that probably forced the hand of PayPal that did follow. Now, Itbit is the exchange that services PayPal, and we saw that peak right around when price peaked here. So $242 million in one day. Remember, they only just started a few weeks prior to that. So people, PayPal, whatever they have there, we're talking 300 or so million customers. They've launched this, I think it was back in November, and bang, hasn't that just exploded higher within a few weeks? I think we're just getting started. In Australia, there's another, Bamboo is a little app that I'm involved in, just to give them a plug, because these things are so easy. These sort of apps, people are familiar with the interface. They're familiar with downloading an app on their iPhone or Android. This one allows you to connect your bank account and round up your purchases. $10 free Bitcoin, guys. They're not sponsoring this video. It's just, I think, a very cool app. And use code NUGGET, $10 free Bitcoin. Who doesn't love that? But the point is here that this is another on-ramp. The friction is being broken down. This is like a 60-second sign up. Your grandma can do it. You can dollar cost average and buy a little bit each week. Or when you buy your coffee for $4.50, you can choose to round up 50 cents and build that portfolio that way. So whether it's PayPal, Cash App, Bamboo app, the number of on-ramps now is just ridiculous. Compared to that last bull market. There's no excuse for not being able to buy Bitcoin. Now, Bitcoin has helped the middle class survive this pandemic in so many countries. There was places where they couldn't get food and water, and Bitcoin helped enable them to do that. There's places with nasty capital controls. Bitcoin enables them to circumvent that. We just saw Iran. It allows them to do trade. Remember, sanctions hurt the everyday people. It's not the politicians that end up getting hurt that are making these rules. So it's just Bitcoin, that politically neutral technology that enables these different things. If we have a look for Google Trends, it's ticked up a little bit recently, but we're still not even at those heights. Maybe we've just got there recently, but I think we are going a lot higher in terms of that interest. So what we've seen so far, the big driver that got us to 42,000 was that silent money, that big smart institutional money. And they're still buying on the way up, 35,000, 40,000. So they don't think the top's in by any stretch at all. We've got that retail flood to come. But this is, I love this image here with the sheep trying to squeeze through the gate. But this is what people realize, that there's so few Bitcoins. Remember, we were all excited about the halving, and I said at the time that I think it's going to be a non-event. But over time, it will make a big, big difference. Once we start to get that demand, it's like that bath filling up with water. it can overflow a little bit and it looks like it's spilling everywhere and the price is going down when there's more sellers. But then all of a sudden, the amount of water going into the bath halves and we're just dropping and dropping and dropping. And so when we start to have that big demand, it makes a huge difference, even though that fine line about how many Bitcoins are coming into circulation, new Bitcoins. So many people are hodling. We'll have a look at that data later on, but there were very few Bitcoins available to buy. And that's when things just rocketed higher and people started to say, you know what, this is such a scarce asset, you've got to get in. Now the macro backdrop, let's rewind a little bit. When Trump was going at the Fed and Jay Powell on Twitter saying, you know, rates are too high, you need to do more, we want zero, we want negative, we want you to print some money. And the Fed were a little bit reluctant. They held off for as long as they could. But then all of a sudden, just as we predicted, same in Australia, they had to bend the knee. They had to do what everyone else is doing. We're so interconnected these days, particularly with the US as world reserve currency. They can't have rates higher than everywhere else because, again, water finds its level. Too much money was coming into the US. The strong dollar was starting to hurt everyone else. So we're all interconnected to some degree there. Remember during the crash when we had all these guys being rolled out on 60 Minutes, you know, Fed Kashkari here, he gets rolled out and basically says, you know, we can print infinite amounts of money. Bitcoin goes from 5,000 to 28,000 after he says that, the joke there. But this kind of changed again. So one by one, the Fed have moved the goalpost. Banks were worried about lending and worried about their reserves, even though, you know, we have the fractional reserve model you might have heard of. The Fed come out and tell their banks, don't even worry about reserves, just lend as much as you can, okay? We'll print infinite amounts of money. Don't worry about bank runs. If people want to try and pull out all their cash, which would normally lead to that bank run and, you know, insolvencies, don't worry about that. We'll print as much as we need to. So they're now openly saying this stuff that, you know, we've been singing from rooftops and maybe jumping from rooftops, saying that all this was going to happen over the years. But more and more of the general public is starting to understand this, because to truly understand Bitcoin, you've really got to understand money and fiat currency. Now, if we go back before that, you know, the repo market really started to blow up in September 2019. And this was a result of the big banks were just speculating. They could make basically free money lending to these markets and then speculating on bonds. And they had a huge demand. They loved bonds. They can basically sell them and they're going to make a profit no matter what when the central banks are doing what they're doing. The carry trade and whatnot. But when that all started to break down and the big banks like Jamie Dimon's, JP Morgan was probably the main culprit, they stopped being willing to lend to the repo market and put in US dollars. There just wasn't enough money in the system and it all started to freeze up because they didn't have an appetite for these bonds any longer. And the government are issuing more and more bonds, but all of a sudden there's no buyers. It's not as attractive. The US dollar doesn't look as good. Now there's a few reasons for that, but it really was the big banks at fault. And this frustrates me no end because they get bailed out. These guys have just made record profits in a year where we had a massive recession. You know, it's a bit of a joke how much money they get, and they're just getting bailed out by the Fed. So this was almost like modern monetary theory in practice here, where the Fed said, no, this is all temporary, don't worry about it. And then after that, we had, remember the bushfires in Australia and all this talk about climate change. And the central banks were literally telling us that they're going to have to save us from climate change at the start of 2020. Now, obviously, COVID happened thereafter, and that's now being used as the excuse. But the financial system was broken and heading down this path no matter what. It could have been any number of catalysts that set this off. But this accelerated things. So the US dollar, the world reserve currency that still had a nice interest rate, so people wanted US dollars, people wanted US bonds, that's all kind of changed now. So these twin deficits, the US have got a massive budget deficit. They're spending way more than they're taking in by trillions of dollars this year because they're issuing all these bonds, but people don't want to buy them like they used to. Even the Fed aren't there to buy as much as they need to. So this deficit is now multi-trillion dollars, but they have to pay all this stuff somehow. So this is what's getting people really, really scared here with this twin deficit. If you have a look at these numbers, it seems like only yesterday we used to look at this and it was at 19 or 21. All of a sudden, we've just absolutely skyrocketed up here towards $28 trillion already. And this is the budget deficit, like I just mentioned, 3 trillion. Maybe that blows out this year to 4 or 5 trillion. So all of a sudden, people are saying, well, I might buy a bond and I might get paid back in dollars. But this year was the first time ever that the amount of currency, so if you look at things like M1 or M2 US dollar money supply, it jumped by 20, 25, 30% depending on what metric you look at. So those same dollars have got 25 or 30% less purchasing power. Now, this is the combined balance sheet of all the big central banks, the big four. Look at that leap from around 14 up towards 23, and this is back in, this is quite recent, sorry. I think this is going up another $10 trillion this year, and we're at this pace now where it's just absolutely insane in terms of the amount of money that they're printing compared to what we're kind of being told is in inflation or the amount of new money that's been created. 90% of people, 99% of people, you and I, we're not getting a look in at that at all. It's all just sort of going to the banks. Now, the other thing that changed this year was the central banks are now so aware of how much they've had to print that they're pushing back here, the same as Trump was pushing on the Fed. Now central banks are pushing back on government, saying you need to do fiscal spending, okay? We've tried everything. They don't want to admit that it didn't work, although it clearly hasn't. It's just created inequality. But now we've got, Biden with this $1.9 trillion package. The IMF have come out and told everyone or governments, spend as much as you can. We need to stimulate the economy. So what I think that does actually lead to is inflation. Some governments are still a little bit hesitant about government debt. In Australia, we're a little bit behind the eight ball. In the downturn here, we forced a million of our 25 million citizens, or I'm not sure how many have a super retirement fund, maybe let's say 20 million, 1 out of 20 million into their retirement savings, and a quarter of those drained their whole account. So instead of the government doing more handouts or more checks, remember they can print money out of thin air, or the central bank can print money out of thin air to fund the government. Instead of doing that, again, the citizens have got fleeced. So you'd never see the big banks having to, being told to dip into their savings. It's always, they're going to get free money, but it's a little guy, you've just drained their whole retirement savings. And the thing is, what happens when they do retire in 10, 20, 30 years? The government is going to be left to foot a bigger bill. Instead of if these people still had all this money in stocks, if the stock bubble continues, at least they get, a benefit from that. So there's another thing that's just driving inequality. Here we can see that negative yielding debt. So interest rates being crushed lower and lower because the thought process here again from economics textbooks, drive interest rates lower, it makes money cheaper to borrow to get loans and whatever. It penalizes savers so they won't save, they'll go out and spend. In the real world, that doesn't happen, okay? What we've found is that savers actually want to save more, so they're more stringent with their savings, and it gets to a point where it's just penalizing people. In Europe now, we've got negative rates on some savers with amounts of, I think it was 250,000. So it's just creeping down and down. Probably next year, the year after, if this continues, it's going to be on all citizens, negative interest rates on your bank account. And it might only be a little subtle change from zero to negative, but I think that's a turning point in people's minds where they're now being penalized and they start to look at stable coins or Bitcoin, something else that's out of the control of those governments and bankers. So one of our predictions from last year was that we would pass this $18 trillion of negative yielding debt from the year before that record. Now that has happened, but central banks are really wanting to fight this. They don't want to continue down this path. They see the evidence that this isn't working. So, Taiwan doing everything they can to avoid negative yields. In Australia, we've had some negative yields on our recent government bond auctions. So another prediction that this would come to Australia and the US. The US had some futures markets turn negative as well this year. So the virus of negative rates has spread just about everywhere. That's their worst nightmare. They do not want deflation and negative yields and things getting cheaper. In their mind, that is the worst thing that can happen. They don't want less money out there and circulating. They want growth. They'd rather have bubbles and too much money than everything collapsing. So this year, central banks pivoted. They changed the goalpost once again. They said, we're going to welcome inflation. We're actually going to aim higher because we've had this period of undershooting. So we're going to welcome higher inflation. Now, inflation, rippling through these markets, that's what the Fed wants to see. But honestly, careful what you wish for. Now that we're doing these fiscal spending and we're giving it, government checks directly to people, all this money printing that used to sit in the reserves of the banks, and they could give it to their buddies and they could speculate on Wall Street and whatever, it would make that little sector hot. And we've seen stock markets go up, 10% a year or more. No effect in the real economy. We haven't seen wage increases. It's just certain assets that are attached to the banking and financial sector, like houses. The price of those are driven by how much can you borrow, how big a mortgage will someone give you. So yes, some of those things have gone up. Some people benefit from that, but the general economy, we're certainly not seeing that. So one of my favorite videos of all time, the truth about inflation and why you're falling behind. This explains what's going on, how they measure the CPI, how it's all a big lie. I might link that down below. But as we see here, it's probably no coincidence that a lot of assets are going up by the amount of real inflation, whether that's 10% in crypto markets, 20%. There was 20% more US dollars created. Is it any coincidence that these futures markets are projecting these rises correlated to the amount of money that's kind of been created? So I think it's all kind of linked in some way there. Another big headline this year was central bank digital currencies. And remember the flip-flop from last year when I predicted that central banks would no longer be able to ignore crypto and pretend that it was too small to affect monetary policy? That was the exact quote from the ECB, from Mario Draghi. Literally, they could not have been more wrong. And we know they've got a great track record of being very wrong. Central bank digital currencies are everywhere. Okay, China's launching theirs. It's probably got a few bugs, but it is being used already. Now, that's kind of put the US behind the 8 ball. They're scrambling to try and get something out, but at the same time look like they're not in a rush and, they're not worried about China. But China are trying to roll it out and get everyone to use theirs. Now, that's never going to happen. Okay, you're never going to see the US using China's digital currency. But every central bank is trying to roll one of these out because it's going to give them way more control, particularly over negative interest rates. They can force that on you. They'll ban cash. There's no way out of the system once they've got everyone using these central bank digital currencies, and they can monitor everything that you are doing. So it's never been more important to understand the differences. When they call these cryptocurrencies, it's just such a blight on the term. It couldn't be further from the truth. I think the other thing we've seen is regulators attack a lot of coins. So whether it's some of the smaller projects or, a lot of the people that liked Ripple and XRP, the currency, were saying how closely that they were working with governments and regulators and central banks. And now they're one of the ones that's been targeted the hardest. We've got this big trial coming up against the SEC. A lot of exchanges have already started delisting this. So I think that is a very important battle that's going to go out. But I think it's also highlighted, and literally congressmen have said this, that Bitcoin doesn't have a CEO that we can call in, or have a trial against. So I'll do another video as well about Ethereum and, that as a technology play rather than a monetary reserve asset as I see Bitcoin. But I think Bitcoin has just asserted its dominance in a lot of ways. It's just pulled further ahead from the crowd and got a lot of people realizing that, oh wow, even at this, $4,000, it's never going to 10x. Next thing you know, Bitcoin's at $42,000. So it has had a lot of money flow into it for a reason. A lot of conspiracy theories floating around about this great reset, but again, the powers that be are literally using this term, and I think they realize that monetary policy's come to the end of its tether. Pardon the pun. We'll talk about tether in another episode as well. But the thing here is that negative rates can't go much deeper without people taking to the streets and getting really, really angry. They've printed these enormous amounts of money. Last time around it was trillions of dollars. Are people going to let them print 10 trillion or 20 trillion to bail out their mates next time around? So it's really reached the end of its lifespan, and they can't just keep lying and saying that, oh, this works, but then we'll change the goalposts. It's all about employment inflation. Oh, well, now that we're not worried about those, now we're just going to let inflation run hot. So basically, they're completely full of BS and running out of excuses. So they kind of need a new system, and I think that's maybe where they're going to smoke and mirrors and pretend that this whole central bank digital currency thing is a new system and it's going to be better, whereas money is basically already digital in their banks and in their computers, so it's not really a big change for them to start using it on a blockchain instead of a server. Now, some governments are very warm to this. Canadian Prime Minister saying Bitcoin could possibly be a reserve currency, and you'll see that it's the countries that don't really have anything to gain or lose that are neutral. I think Switzerland's a massive candidate to become really Bitcoin friendly and maybe hold it as a reserve asset. But it's the US, the ECB, it's those that have really got a big stake in being world reserve currencies and widely used in global trade that are going to fight Bitcoin the most. Mark Carney from the Bank of England saying that the dollar's too strong. I think this is a massive statement in history. One of their allies actually saying that the US dollar is no longer working as world reserve currency. It's become a smaller and smaller percentage in terms of their economy of world trade, but it's the US dollar has become a bigger and bigger part that they're getting more and more of a benefit from. Now, if that all ends, they're in a lot of trouble. We've already seen, the bonds and people don't really want those dollars because they're having to print so many of them to cover their costs. If they lose that world reserve status or it gets eaten into more, those deficits blow out, the strength of the dollar blows out. They're going to have to be printing tens of trillion a year to cover all their, their way of living and the privileges that they've had. Now, this is one from a year ago that I showed where Bitcoin was 183 billion in terms of its market cap. We've since hit $1 trillion. So Bitcoin has rapidly climbed this list. Gold's also gone up a lot since here. So gold might even be up towards number 4 spot. But in this list, we've got Bitcoin at number 14 by largest currencies in the world. So when your friends say, oh, they'll never let Bitcoin succeed or it'll never really become anything, it's creeping up this list. And again, I don't know when this was taken. It could already be up in the top 10. So this is why we've seen the big change of attitude from regulators. Simon Dixon and I have spoken about this in a number of interviews over the last few years. The war for control of money has begun. Central banks want control of money. Banks want control of money because remember, they get all the money that's printed as reserves, and then they get to dictate if those reserves actually become money in the economy through loans and lending. So banks have got a lot of power. And you've also got governments that kind of create money by spending it into existence, you can think of it as. And that's the whole basis of MMT, modern monetary theory. Do governments just say, well, stuff selling bonds or stuff, telling the Fed or the central bank that they need to print some money to give it to us, let's just spend it into existence. And so you've got those three powers that are all vying because they don't want to lose their power. And if any one of them has this digital money, maybe central banks don't need banks once everyone just has the Fed app and they can print Fed coins and give to people directly. They don't need those retail banks to be in the middle and interface. Maybe governments work out that they can launch Trump app or Biden app and print Biden coins as stimulus checks instead of stimmies, as they call them, that are getting posted to people. And Jamie Dimons of the world have already spoken about how they want to launch JP coin because they want that power. So this is the war for control of money. And then outside of all that, we've got the people's money, crypto, digital money. Now, I know people say gold and silver, the people's money, fine, but I'm talking about in the world of, online, the digital economy, the modern world. We've got the people that can use our own money and have a degree of privacy compared to what the governments want to do. So in Australia, we're still seeing the big banks banning Bitcoiners. Any company, even a transaction or business, if they see the word Bitcoin or crypto, they're just shutting them down and saying, no, we don't want to deal with you, and not even giving people a reason a lot of the time. So I can't believe this is still happening and that regulators are letting it. Like, this is completely unfair behavior at a time when they're talking about phasing out cash. So when that happens, all the crypto businesses in Australia, just can't get bank accounts? Tattoo parlors, adult entertainment, whatever it is. There's so many industries where banks are going to look at them and go, you know what, you're a little bit high risk. Even though you're not maybe illegal, We just don't want to deal with you, okay? It's too much of an overhead cost to have someone look into that. And that's the way the world is going. It's so important that we have our own money, whether that be cash, crypto, gold, or all three. I know this isn't just Australia. There's a lot of other banks around the world and stories we've seen where they've chosen just to not deal with crypto customers. Christine Lagarde used to be pretty open-minded towards technology and innovation. Since she's gone from the IMF to the ECB, the European Central Bank, she's come out recently and said that there's all this money laundering concerns and we need these regulators, we need stricter rules, we all need to be on board. We can't have anyone not be on board because as soon as there's one outlet, it'll flow through there still. So very much a change of tune from her. Hey, in concert, we've got Janet Yellen, used to be head of the Fed. She's come out and said that, crypto, Bitcoin, mainly used for illicit financing. This stuff makes my blood boil. What a load of absolute crap. We have seen these studies beyond a shadow of a doubt, okay? Chainalysis, these reports, they've shown that this is not the case. This is a false narrative. It is a lie. But the media doesn't say that. The media just tells everyone, and maybe, this is holding people back. Very, very frustrating. The other thing that we've seen now is FinCEN have proposed these rule changes about every wallet address you have needs to be registered. So an exchange won't even let you withdraw your coins until you've told them everything about that wallet address. Who's it belong to, almost like you've got a KYC and AML your addresses as well as yourself individually. Thankfully, this has been put on the back burner for now because think of the honeypot that this creates. Recently, we saw Ledger, that one of the crypto hardware wallet providers, get hacked, and all the details of all the customers are now online. Think about if government goes down that path with the central bank digital currency and they've got all the records of everyone and what they spend. That is just going to get hacked sooner or later. And that is, again, we do not want this. Government are not going to be able to keep that secure. There's going to be a crack or a leak or someone's going to get paid off once that information's out there. It's just so dangerous. Now, thankfully, Biden came in and he froze all these agency rulemaking pending a further review. So this includes, Secretary Mnuchin's proposal about all these unhosted wallets. So, breath of relief for now. This is good in the short term. But who knows? This is the big battle. I think I did a video a couple of years ago saying the biggest battle for Bitcoin, Ethereum, and privacy coins, it is coming. And this year we saw a lot of privacy coins get listed and attacked, but Bitcoin and Ethereum as well and others are rolling out privacy features. So that is going to be a massive, massive battle going forward. I wanted to throw this one in here. This is Janet Yellen. This is the speaking fees that she gets. All these big banks and financial institutions. These people are just talking heads. They're puppets. They're put in these positions. These are the people that are funding them. It's no surprise that they come out and attack Bitcoin and crypto. Now, just recent days, Bitcoin has had a big, sharp pullback. And once again, we see these headlines of, Bitcoin broke. There was a double spend. Bitcoin is plunging because it's broken. And it's just so far from the truth. It's not true at all. I've explained this in videos. Sometimes a Bitcoin transaction will be included in two different ways by two different miners on either sides of the earth. And then when we get to the next block in the chain, they say, well, which one are we going to use? And we get back to one version of truth. Okay, so the blockchain functioned as it was meant to. Every year we see this sort of crap pop up in the news when Bitcoin's at a high price, trying to drive it lower. Every year we have the Tether FUD, like I joked about before. Tether's not backed, or the regulators are going to show they're insolvent. Tether have been around for 5 or 6 years through those big market cycles, through 80, 90% drops. Traders buying hundreds of millions of dollars. Traders taking hundreds of millions in profit. Okay, it is a joke to me that people think that there's no real money there with all this profit taking and market cycles surviving the test of time. All right, so let's just zoom in. Just in the short term, like I said, we've had a pretty nice bounce today. Where are we now in terms of a pullback? I think we're close to 25% or so for Bitcoin, 30%. So in previous bull markets, it's been that 30 to 40% mark. I would suggest that there's a lot more bigger money and serious money with an interest now that's been waiting for a pullback. So I would think that we're probably not going to get something that's much more generous than 30%. So look, I think that the bull market is still very much on. Let's have a look at the on-chain data, because this is what, as a trader and investor, gives me peace of mind that I can look at. And look, I don't want this to be about the short term, but I think it would be great to look back and on this video and this be the new low for the year and us just charge on into a bigger bull market. So in terms of sentiment, we can look at the funding rates on some of these exchanges. This got up to 0.54% on BitMEX for Ethereum and 0.16, 0.19 on Bybit for Bitcoin and Ethereum. So this is very, very expensive for so many people borrowing to bet that Bitcoin is going to go up. And this was only 24 or 48 hours ago. This is how quickly the switch is just flicked. So it's already gone negative or right down to zero here. What that tells you is traders, when Bitcoin and ETH were near all-time highs, were betting that it was going to go up. And now that it's dropped 30% and that's the time to buy, they're betting it's going to go down. So this is, retail, the herd, the majority of traders do the wrong thing at the wrong time. It becomes a self-fulfilling prophecy, because when they're all betting it's going to go up, they can get squeezed to the downside. And that's when we see these sharp pullbacks. Now, this isn't too extreme into the negative. It's basically flat, but I think that lets the system reset from that speculative money that's out there and gives us almost a green flag to continue higher. So this is unrealized losses. Let's have a look at unrealized profit versus losses. Actually, I think I might even have it here in a second for you. Yeah, net unrealized profit loss. This is a great chart showing you the extremes. So when just about everyone here, 100% of people are at a loss, where do we get to? 82%. That is the perfect time to buy. When it gets up towards this, 80 odd percent in profit, that tends to be a good time to sell. And where we got up to the other day, it was starting to get pretty high, into the 70s. We've since had a bit of a pullback, maybe into the 60s. I haven't got the very latest data here. Is it going to give me the latest one for this? Okay, cool. So yeah, we're back into the 60s now. That's had a little bit of a reset. That volatility, we need a little bit of profit taking, but at the same time, I think that this cycle is a little bit different, and I'll talk about why at the end. Total transfer volume to exchanges. So we did see a lot of coins get moved to exchanges recently, but if we actually break down the data and have a look at it a little bit further, a lot of it wasn't really from the whales and the big investors. We've seen a lot of stable coins so far. It's a great metric when we have stable coins going to exchanges, a sign that price is about to run up as well. This is the last active coins 2 or 3 years ago. So a big run up here. When this is increasing, it's showing you that there's a lot of coins that are now qualifying for this haven't moved for 2 to 3 years. Now that dropped off a little bit. We had some profit taking. It then shot back up. It's rolled over again a little bit here as people take some profits. But we're nowhere near down at these levels when we had a lot of people selling back in the previous peaks. Balances on exchanges, this has been falling since the start of last year and continues to fall. So less and less coins on exchanges, more and more hodlers. This is probably a massive important one to understand here. This is the supply of liquid coins. So how many coins are being sent to exchanges or being withdrawn versus deposited. So what we can see here is that the liquid supply is still falling massively. This is as big as we've ever seen. So there's fewer and fewer coins that are actually available to sell or to buy, to be traded at all. They're just not out there. More and more people are hodling for the long term. So here we can see these whale addresses have just skyrocketed. During that time when we had small fish, retail investors, mid-size investors, when they were selling, they were literally selling to the hands of whales. They started selling too early. They were selling when price was rising, even $10,000, $14,000. They thought, we're going to have a pullback here. Oh, it won't go to 20. It'll have a pullback here. And I said at the time, they're going to have to chase the market. Again, retail did the wrong thing at the wrong time, while whales are looking at these six-figure prices and continuing to hold. Now, just recently, for the first time, we did see a little bit of selling. This is the whale ratio here where it crept up higher, and we did see some selling. Now, here the whale ratio was higher, but we had a huge institutional demand, and we can watch that very closely with these metrics that I look at and I share with our members every day. Coinbase had a lot of money going in. There was a premium on Coinbase, so price was higher by $50 or $100 than other exchanges, and we could see that a lot of outflows were happening from Coinbase, going to the wallets where they use the cold storage and custody for their OTC funds. So during this whole period, we had big OTC buying that we could see on chain. Now that stopped, that dried up a little bit. So that was kind of a bit of a warning sign that, yeah, this is maybe another bit of a sell-off coming now. And you know what? They're allowed to take profits, guys. We can't expect Bitcoin to go from 4,000 to 40,000 and no one take any profits. This is a healthy part of the cycle. We need people to be happy with the amount of profit they've taken for us to start that next leg higher. Now, mega whales bought back almost everything they sold today in the past 24 hours. So 92% of what they sold, they've bought back. That is just an amazing stat. So I think they know that people are watching what they do on chain. Like when I do my update and say, you know what, guys, there's a bit of a dip coming. Whales have started selling for the first time. Retail gets scared when they hear that. Then price starts crashing. Then they dump. And then the next day they read this stat that the whales have bought all back. And they're thinking, oh, I just sold this morning. And now price has already bounced 10%, 20%. And they've got to chase the market higher. Okay, so this unfortunately is the circle of life. All right, so let's have a big picture look at price, and then we're going to talk about technology to finish off. This is my time cycles, my custom indicator that I align. We can go back to 2011, or basically this is when Bitcoin got a price. And these black lines are just indicating the steepness of the growth. It was very, very rapid back then in that first cycle. A little bit shallower here, but still a massive jump. And it goes for the length of this cycle and then a bit of a pullback here. Length of this cycle from when Bitcoin was created back in 08, 09, bit of a pullback. Same again, massive run up, bit of a pullback. And this is where I did that video when Bitcoin was 3,400, saying that, hey, this is the black line of where I project is going up towards 100,000 over the next 4 years. So things maybe weren't looking great when we had this wick down here, but I think this is a once in 100-year event, what we saw on the markets in March there. But haven't we caught back up to that perfectly? And we're still on target for 100,000 even this year, maybe 2022. Hey, maybe we can get there this year. Do you really think that's impossible when we're sitting at 42 to say we're just basically a double and a bit more from there? So I would not mind a longer dip. Maybe we have one more charge to 70,000 and then a bit more of a pullback back to say 30 again, and then we go charging off to 100. But this could surprise everyone and have a massive run towards 200,000, 300,000, like 400,000, these huge targets the banks are talking about, and then have a big correction back down towards 100,000 or whatnot. So look, who knows? But all I know that the metrics to me are still very bullish. So technology, one thing that doesn't get spoken about enough. Bitcoin is a payment system. The Lightning Network's been a little bit disappointing, but it's still being worked on as a payment system, and you can still send money from person to person using Bitcoin. Okay, maybe you have to wait for fees to be a bit cheap, but if you're sending thousands of dollars, millions of dollars, it's still a good payment system in that regard. However, what people don't talk about is the actual Bitcoin blockchain being able to be used as a peg for other things to be built on top of for security. So Microsoft are launching a digital ID tool on Bitcoin. Rootstock are a company that have been out there for 5 or 6 years, and they've finally got a little bit of progress where they can build on top of Bitcoin using smart contracts that are not quite the same as Ethereum, or I don't think we're going to see the flexibility and the range of things that we can do there, but we can do more on Bitcoin with these side chains and these smart contract layers. This is one that Red Fox have partnered up with to issue NFTs, non-fungible tokens, on rootstock on top of Bitcoin. So I just think that so many people aren't aware of a lot of the tech things that are happening, and there'll be a little bit of maybe DeFi products even on Bitcoin in the next 12 months or so. Wrapped Bitcoin, so Bitcoin on other networks. Hasn't this exploded from not even existing in May 2020 to 125,000 Bitcoins on Ethereum? Now, if ETH manages to scale and have those layer 2s, that's going to complement Bitcoin. You love it or hate it. I know a lot of the maximalists don't like it, but if you can have your Bitcoin on Ether as wrapped Bitcoin, or the token, the IOU, I know some people don't like it to say it's not exactly the same Bitcoin, but if you can have it there and send it on another scaling solution or cheaper, I think that is a value add. It's a complement. I don't think it's a bad thing. And finally here, we've got that infographic I know you all love when we compare Bitcoin and its market cap. So, hey, this has since grown a little bit bigger, but when we compare all those assets at the Fed or gold, derivatives, world GDP, real estate, have a look at that. A lot of people view real estate as a place to store value that always goes up with inflation. Maybe Bitcoin starts to act in the same way. And then we've got our global debt, and you don't want to even know how big the derivatives market is. So guys, that's it for me today. If you want anything else, head over to nuggetsnews.com.au. We've got all our free crypto education there. And don't forget our new platform, Collective Shift. So this is where we've got all our knowledge center, that info. You get my daily posts if you sign up, all our premium research, the team and I, our 5,000 strong community members all helping each other. If you want to become part of that, head over to nuggetsnews.com.au, check out our new Collective Shift platform. Otherwise, smash that like button, subscribe if you haven't already, share this video around, and I'll talk to you again soon. Cheers.